Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. So, hope you're all having a great week. We are continuing to build on yesterday's pretty big reversal rally rebound session, whatever you want to call it. We're getting some nice continuation today, uh, and we're getting some nice uh, action in names that are reporting. So, you get some good overall action. You're getting some action in the names that are reporting. So. Um, just one of these weeks where maybe a little bit more unexpectedly busy than you would have anticipated, with really not a whole ton of scheduled news, right? So what I want to talk about today is Stitch Fix. Okay, so you guys all know Stitch Fix. This is one of the names that I talked about in this past option session. So last week we talked about Stitch Fix. Um, I've talked about it on the VTF a couple times, and in the earnings on the radar video, I highlighted it as one of the more interesting setups this week. And it basically it's a really good example of why I like straddles, strangles in this case. And a lot of times people ask me the question, like why do you do so many like trades that are basically betting in both directions, right? So strangles, like why do you do so many strangles? And it's because a lot of times, like I look for setups that I think can move, right? So yes, I do have biases a lot, right? Like there's certain setups where I think like look really great on the bull side, or certain setups where I think look really great on the bear side, or certain setups where I really think that the number is going to be really strong, right? A blowout, or and there's other setups where I think that the number could be pretty weak, right? So of course I have biases, but at the same time, earnings can be the reactions, right? The reactions to earnings can be more unpredictable, and there's certain companies that have um, not like a clean history, right? They could like their quarterly numbers are kind of lumpy. Like there's no continuity between one quarter to the next. One quarter is a massive blowout, the next quarter is a massive miss, and so on and so forth, right? So a lot of times I look for the setups that I feel like are where the options are not pricing in the potential of the move, right? And Stitch Fix was one of those. So what I do is like I look at what the options are pricing in. So in this case, like the weekly options on Friday, Stitch Fix was priced in 4.5. By the close yesterday, it had gone up a little bit. It was a little bit closer to 5. There was a little bit stronger of a bid on both sides of the options during yesterday's action. But what was really interesting was that Citrix was essentially at the exact same price as it was last quarter, right? Almost an exact same setup as well. So, just doing some quick lines here, you can see that was basically stuck underneath this couple month resistance, right? Had rallied, failed right at resistance, stuck right underneath the 200-day, and it was more or less at the exact same price. So, and when like last quarter was at 26, yesterday had a pretty big move into the close, and it finished up closer to 27. But give or take, a point. It's really not that significant. It was basically a very similar setup, right? So what do you have? You have a really well-defined area of resistance and plenty of room higher, right? And then you have last quarter as the benchmark. Like what happened when it was in basically the exact same setup last quarter? Well, the company had a weaker report, and it dropped over 8 points. Okay, so basically last quarter when it was in more or less the exact same spot, a very similar setup, it dropped 8 points. I'm not even going to talk about October because that in terms of like the overall movement, that may have been a one-off, but just using last quarter as a gauge, it dropped about 8 points. Okay, so you have a stock that's basically in a bumping into resistance with plenty of room higher, right? You already have a benchmark from last quarter. Last time it missed, it dropped 8 points. Yet the options were only priced in 4.5 and coming into the week and 5 ahead of earnings yesterday. So it moved 8 off of a very similar setup last quarter, right? Short interest, 35% of the float, give or take. People were really leaning into this thing short, and right, and on top of it, it's the holiday quarter. So yes, they're not like a retailer in the normal sense of like a brick and mortar retailer, but it is retail oriented, and it's the holiday season for a retailer. So obviously, there's more importance around the 3 month stretch where the holidays are. So you had multiple things, right? So you had a high short interest, holiday quarter, basically, clean levels to work with, right? 7. So basically, if it got up through this, what was the next area of focus? 34 to 35. So 7 to 8 points higher. And then what did it do last quarter? It dropped 8 points, right? So a retest of like the 18 area would be about an 8 point drop lower. So you have a stock that's indicating it could move between 7 and 8. It moved 8 last quarter, right? Heavy short interest, holiday quarter, yet the options were only priced in 4.5 to 5. So my thinking coming to the week was that like the options seemed underpriced based off the totality of the data, right? Of the totality of the indicators saying like this should be a very significant move, right? My bias was on the downside, right? Because of October disaster and then December, right? So followed up October's ugly print with another disappointing outlook. So my bias was short going into this. The stock, people were leaning short. It was coming off a couple of weak quarters, so I was more biased to the downside. And this is exactly why I like to play Strangles as much, because I was dead wrong, right? It was a beat across the board and a strong raise. And what happened? The stock broke out and ripped up into like the target range, right around like 34 to 35, right? So I was, I was wrong. I mean, I was dead wrong, like on the direction, but I was right on the sense that the options weren't pricing in the potential move, right? So that's how, or that's why I like to say you can be wrong and still be right when it comes to these type of strategies. It's like my bias. So I may have been leaning more on one direction, but I still had trades on both ways because I recognized that the setup was one where there could be a significant move in either direction. And that's really why I like doing like these strangles. Yes, like I could stagger, you could stagger the premium to like favor one side, but at the end of the day I still like having options on both sides just in case like you get a move like this. It's something that completely surprises everybody, right? Like a strong beat across the board and raise guidance when there was really no indication that like that was coming. So you get like these really sharp moves, and a lot of times the ones that are the surprises or the ones that lead to the bigger moves. So that's why a lot of times I like to play things both ways. Make sense? I just felt like it was, it was a good example of why I do strangles and straddles so often, right? And I get a lot of questions about it. A lot of people just like to take directional bets. They say like I'm really confident that it's going to beat, or I'm really confident it's going to miss, and I really only want to focus on one side. I was like, well, whatever works for you, right? If that's what you have success with, then that's great. Like you stick with that. But for me, I found that my confidence arises sometimes out of directional bets, yes, but also in these setups where I'm basically playing against the market maker, right? I'm playing against the person setting the odds. Like they're saying like the options are only priced in 4.5. Well, I'm saying like my conviction lies in the sense not that I think it's necessarily going to go up or down, but that it's going to move more than the 4.5. Cool. So some other interesting setups coming later this week. So keep an eye out for those in the options and play letters. Again, like I said, like there aren't as many reports, but the ones that are reporting this week are fairly interesting. And what you often see in these types of weeks when there's only like a handful of like bigger names is that a lot of people will focus on them. So sometimes you get these really sharp moves because you get a lot of participation. So it's not necessarily a bad thing. All right, guys. I hope you have a great night. If you have any questions or comments about Stitch Fix or any other trades, don't hesitate to reach out. All right. Again, have an awesome night, and I'll talk to you all tomorrow.